Well, with me now, Joe Johnson, the Conservative MP and former columnist for the Financial Times, Lord Oakeshott, the Liberal Democrat peer and their Treasury spokesman until a little disagreement over banking reform recently, and Louise Cooper, who's a markets analyst. How long do you think before RBS says, please give us some more money, taxpayers, thanks very much?
I don't know, but I know what should happen, which is that we shouldn't wait, we should take the initiative. RBS can't trade their way out of things as they are. At the moment, we've got the worst of all possible worlds. We've put in £40 billion, but we still haven't got control because the Treasury is hiding behind the fiction, really, that it's not a publicly controlled company. And George Osborne only this week said that everyone knows, I'm glad he does now, he didn't a few months ago, but everyone knows that small companies struggling to get credit and the banks are weak. Well, we should take full control, as we did with Northern Rock, nationalise Royal Bank of Scotland, turn it into an engine of growth. We must
not let it die, sorry.
Absolutely not let it die. Take control now, get in front of the curve, and, you know, it's our money in there, but we're not getting any bangs for our buck, and that is the way to get the money into small businesses. They are failing on small business lending, and that's how we get jobs growing.
Joe Johnson, I mean, the whole point of the Vickers report is to make sure that the taxpayer is protected from this kind of thing. It would be hugely embarrassing if RBS says, please give us some more money, wouldn't it? Wouldn't nationalising it, properly nationalising it, be the best solution?
Well, I think you put your finger on it, which is the Vickers report is in a sense responsible for the downgrades that we've seen today, because what the credit rating agencies are responding to is the increasing likelihood that the state won't have to bail out the banks again. Moody's and other rating agencies are gradually withdrawing from their analyses the extent to which the government is going to be likely to be pumping capital in there. So this is in a way a positive development rather than a negative one. Well, and I'd be reluctant to write RBS off altogether at this stage. Let's not forget...
It would be hugely embarrassing. I mean, I can't imagine what it would be like as a politician going to your constituents and saying, yeah, I'm sorry, but even now, 3 years on, we have to pay more money to RBS.
But I don't think we should write off everything that RBS has done in the last year in terms of recapitalising itself. RBS's core Tier 1 capital ratio stood at the end of the second half at 11.1%, which made it one of the strongest banks in Europe. Now, in a stressed scenario, that went down to 6.3%. Now, that was still above the critical ceiling of 5%. However, you know...
Come on, why is the share price 23p? That's what's saying it. Why is the real market, which is credit default swaps, saying that it is twice as risky as HSBC and 60% more than Barclays? I mean, we must... The reason we bailed them out was so that we could save the British economy and make it lend. That's what matters.
It still has residual exposures to Italy. It's managed down its Italian exposures from 4.7 billion euros to 4 billion.
We want it to lend to British businesses.
You sound like you want it to collapse.
No, we want to sort it out. We've put the money in, and it's not doing what we wanted under this government and the previous government. It is not lending.
Louise?
I kind of think we're missing the point here. The point here is that Eurozone is teetering on the edge, and it could get very messy. And I think everywhere I look in financial markets, credit default swaps, all kinds of credit instruments, everywhere, there is massive fear. Everybody I speak to in the financial world cannot see a solution to the Eurozone crisis. I kind of think that because we're in the UK, we don't think it's relevant to us. It is massively relevant. Moody's downgrade, frankly, I don't care if Moody's downgrades the UK banks. Well, I'm far, because effectively it's on the back of the Vickers report. Well, the Vickers report isn't going to be implemented till the next general election. That's years away. Eurozone is teetering on the brink now.
Right now.
Banks are having problems funding themselves right now. You know, the idea of the solvency ratios, well, if you're a European bank who has to balance their books at the end of the day, they are having trouble doing that right now.
But is that because the market sense a lack of political leadership everywhere?
Everywhere. But also, I think a lot of people think there is no solution. We are heavily indebted, we have gorged on debt, and it's now time to pay it back. And a lot of electorates, a lot of people do not realise this. All the public services we've become used to having, we cannot afford.
Do you see some of that? Because, I mean, for instance, the stress tests, when, you know, people think they're a joke.
People are being far too optimistic. I mean, the fact is, RBS, if we hadn't had to bail it out, it would be bust today. But it's, you know, at the moment, we're losing both ways. You know, we own the shares, but we're not actually using the control. Now, the key point is that we've got to get growth going again, not just in our economy, but in the other economies. And where the real problem is that small businesses can't get the finance. That's where the jobs are going to come from. And unless we can do that, we're going to be stuck. But the deficit will get worse unless we can get some growth going, and banking is the way to do it.
Indeed, but the loss of confidence is also a loss of confidence in the political classes to get this right. And there is a degree of despair about that. I mean, not just in the markets, but ordinary people who don't think they've got a stake in the stock markets are looking at it and saying, who's getting us out of this?
I think George Osborne was right a few weeks ago to say that Europe has 6 to 8 weeks to deliver a credible plan. And I think by the time the G20 summit comes along next month, financial markets certainly want to see a plan on the table, and that involves several things. It involves Eurozone governments putting out on the table a clear path towards some form of further fiscal integration. It involves considerable commitment by 2 governments in particular, Spain and Italy, towards serious structural reform. And it involves political unity and leadership on a scale which we simply haven't seen so far.
But do you see any of that leadership? I mean, in other words, the stress tests are an interesting case in point, aren't they? People look at that and think, everybody passed it, then we hear Dexia, about Dexia this week. So we have no faith in the institutions, do we?
So this week we've had stock markets rally massively, 8-9% on the back of, supposed comments that we're going to get European governments putting money into European banks. Bank recapitalizations. What do we get today? Merkel saying it's not happening. There's a meeting at the weekend. It may or may not happen. But as we heard from Andy Verity, we need hundreds of billions of euros putting into European banks, and that needs to happen pretty quickly. It's going to be a nightmare happening. It's going to be a nightmare.
Obviously, these are things, but they're not under our control. Let's just come back to Britain for a moment. We are outside the euro. These banks are under our control, both RBS and Lloyds. They should be under our control, but we are not using that control. And I mean, frankly, we have kept the confidence of the foreign bond markets, but we've lost the confidence of the British consumer. I'm out and about all the time. I invest in commercial property all over the country, and for several months, I can tell you, outside the London bubble, which is a different economy, things are really desperate. And what we've got to do is we've got to get the lending going out there, and we've got to get the confidence coming back. But otherwise, I'm afraid it doesn't matter what happens in Europe. We are going to be stagnating for a very long time.
It's staggering, is it not?
It is massive. But the trouble is banks cannot fund themselves. So you're saying,
well, just a minute, I've said that we should nationalise RBS and then we won't have a funding problem. It's that important.
Can you imagine?
We must do it.
Can you imagine any major politician in Europe saying we must have more taxpayers' money going into the banks? We absolutely need more taxpayers' money for this. Can you imagine? Can you imagine saying that to your constituents?
I think Lord Oakeshott has a point to the extent that the Treasury has instruments within its grip to force Project Merlin, which is the scheme to push the banks to lend more to small businesses, to really make sure they do. Yes, they have a funding problem, but it's important that we make them stick to their commitments under Project Merlin and get finance to small businesses. It's a critical part of the government's growth strategy, and Project Merlin is delivering, and we've got to make sure it continues to deliver.
I don't want to say I told you so, but Project Merlin, I felt at the time, was not going to work. It hasn't worked. I'm very pleased to say that George Osborne has as much as admitted it this week. So the logic of that is that we use the levers we've got. It's all very well to be talking about new funding systems, but here and now people are desperate to get a loan from RBS, to get a loan from Bank of Scotland, the banks that we control, but we are not pulling the levers, and that's what we must get on and do.
We'll leave it there.